Hi, welcome to the Market Alert for Thursday, the 28th of July 2016. So yesterday was the FOMC meeting minutes, which were released at 7 p.m. That was BST. But prior to that, we saw the market actually open and trade sideways, waiting for the crude oil figures. We had a potential sell signal that came in, and then we saw this being filled and then trading down just in time to the scalp and also the 18,500 level before we had the release of the news. The news then came out, and this moved lower, which is quite odd really, given that the actual forecasted figures were minus 2.1 barrels and they came out at 1.7 on the positive side there. That said, the market then continued to move lower and then became sideways all the way through, fast forward all the way through to the FOMC minutes, which was the red vertical line there at 7 p.m. The market then reacted to the news that, it wasn't really any news, that rates would remain unchanged. And then 10 minutes later we had a buy signal, which we saw the market actually fill, and then we went up to the scalp. At this point, the market had driven quite strongly, so I thought I would sit and hold this position just to see how things panned out. And I'll just fast forward, and you'll see the trade end in a minute when the market came back, just rescaled the chart. I wanted to see if it would hold above the 18,500, and then when it came back I decided to exit stage because there was no major reaction to the Fed. And as I said, after the last month's Fed meeting, there seems to be the new pattern. When they're not doing anything, the market just goes into this sort of sideways pattern. We then had a potential sell, and you can see now the market trading sideways, nothing really happening in the market, and really should call it a day. There's another buy signal here, which is filled. The market then moves higher, but fails to hold. You can see there the most we had on the trade there is 15 points before the market then starts to come back. And we head into the last 15 minutes of trade, which you see there, with a chance to get out at break even. And if not, if you wait till 9 p.m, you get the loss of 16 points there on this trade, and then the market moving to the downside there. In the daily chart, let's have a look at the bigger picture. You can see we've got this sideways movement still in place for the Dow. Very quiet range at the moment, waiting for something to hit the market, and I'll come to that in just a moment. So you can see their price is just sideways in this range, although we have got some lower highs in there, but ultimately this market is still in the sideways range. And there's been a bit of a kick up in the volume for yesterday, which you expect with the volatility after the release of the FOMC meeting minutes. News-wise today, what have we got? Not a lot, nothing in the main part of the session. It's just the unemployment claims, the weekly unemployment claims at 1:30 p.m. So again, we may have a busy part of the first session and then it fizzle out in the second. I don't know this, can't guarantee this, but that's what it looked like, unless we get something else to move the markets. In the implied volatility 1019, this also very quiet. Again, that's reflected in the chart, which you can see. This also trading sideways, but we're starting to get a round off now of the historic volatility there. Talking of problems in the markets, Deutsche Bank, this is the only one that's really going to set the cat amongst the pigeons. 98% plunge in profits, and there is worse to come. And what this article doesn't talk about, because it's partly cribbed from the mainstream media, is the off-balance sheet derivatives that they hold, which is 50 trillion. That's not even mentioned in their banking summary or in the release of the earnings for the last quarter. There's 98% plunge in those earnings, and they still not mentioned the off-balance sheet, as they're called, derivatives of 50 trillion. It is an absolute mess, actually, when you actually do read the detail. And as it says there, the pain is set to get worse. And the reason for that, of course, is they were caught, as you know, if you've followed the market alert, for fiddling the gold and silver price, forex, and also there was another one they've done. I mean, I think they probably had the hand in most manipulation, to be perfectly honest with you, along with the other crooks of JP Morgan as well, which are still waiting to be exposed. So here we've got a situation, a ticking time bomb, I suppose, is the best way to describe it. Let's see how long this actually lasts. And thinking about it, let's have a look at the share price from yesterday as well. So the share price down yesterday as well, down over €1, another 3% down yesterday. If we look at the 5-day, you can see they're just starting to turn over. We're not taken out the lows yet of 12.19. What you've got to watch for this is ever so simple, is the €10 price level, because that's a major psychological level for traders. It's not a support, it's just a major psychological level, because if the shorts actually get the price below €10 and get it all the way down, then it's a good night Vienna for Deutsche Bank. There will be major problems coming. So watch the share price go below the €10 level. And also this is interesting as well. Good article about from Richard Koo. If helicopter money succeeds, it will lead to 1,500% inflation, and of course that's the objective, to actually increase inflation significantly, Zimbabwe style, to actually reduce the debt. So no surprise there. That's what they've been trying to do with QE. Unfortunately, it hasn't worked, because it stayed in the bankers' pockets and not actually made its way out into the consumer side of things, even though we are seeing lots of new cars on the road and all the rest of it. Nothing to the degree of what they were hoping that QE would actually do. So there you go, that's it for today. I will see you in tomorrow's edition of the Market Alert. Have a good day, and as ever, thanks for watching. See you in the next one.